Facebook, Apple, Google, and Netflix, or FANG Plus. It is often said that the products that you use are the best companies to invest in. A lot of us have accounts on Facebook. We use Gmail and have Netflix to watch and binge movies on. Some of us may even afford an iPhone also. But have you ever thought of investing in any of these companies or these products? And even if you can you afford one? For example, Warren Buffett's Berkshire Hathaway, one stock of his company cost around 5,17,000 US dollars. That's about 3 crore 95 lakh Indian rupees. To understand how or if you can invest in foreign stocks and why you should do it, we have with us Sanket Dhanorkar from ET Wealth. Sanket writes on personal finance. Thanks, Sanket, for joining us. So please take us through the ways through one can invest in US stocks or any foreign stocks, or even if we can do it.
Sure. So just to give you some context, currently Indian investors so far have been used to investing via international funds. But this route is currently closed because there is a restriction on the overseas investment limit imposed by the RBI. Now, because of this, investors do not have the option of going via the traditional way, which is the international fund. Now, apart from a few other options like fund of funds that invest in overseas ETFs, there is really no alternative. The only thing left currently is going via the LRS route, which is the liberalized remittance scheme. So under the liberalized remittance scheme, Indian residents are allowed to invest or remit up to $250,000 in a financial year. Okay, but the important thing to note here is that this limit subsumes other foreign transactions or expenses such as your foreign travel, foreign education, or even the maintenance that you send abroad for your close relatives. So at the prevailing exchange rate of say roughly rupees 76 to the dollar, this limit works out to roughly 1.9 crore a year. Okay. So as you can see, it is still a big enough window to invest in foreign stocks, including any foreign expenses that you might have. Besides, if you are a big ticket investor, it is possible for you to actually spread this outlay between your family members. Okay. So theoretically, if a family of 4, it is possible for you to send up to $1 million US abroad. This actually comes out to roughly 7.6 crore. So as you can see, it's a very big window which investors can tap into.
But I'm talking about investors like normal people like me. And
sure.
I'm not talking about 1 crore. If somebody, like many people have just recently started investing in stocks, and if a person like us, can we actually think of or dream of buying these stocks through some other, and if there are any available routes, can you please explain that?
So there is no dearth of options for Indian investors to invest directly into foreign stocks. Okay. At the very outset, there are many Indian brokers who offer this facility through tie-ups with foreign counterparts. So you have options like ICICI Direct and Kotak Securities, who have a tie-up with Interactive Brokers. Somebody like HDFC Securities and Motilal Oswal also offers through a tie-up with StockN. So there are many other local brokers apart from these, and investing via a reputed local broker will provide a sense of familiarity, a sense of comfort for domestic investors. Okay, so apart from the Indian brokers, there are several fintech players like Vested, Stockal, Vinvesta, or even Globalize, which also offer Indian investors participation in global equities. Now, these are mostly tech-driven platforms who have a tie-up with the foreign brokers. They are not offering the services directly. If comfortable, domestic investors can also approach the or open an account with the foreign broker directly. Currently, brokers like Charles Schwab, TD Ameritrade, and even Interactive Brokers offer their services in India. Now, apart from these, recently both the BSE and NSE have started their own platforms, which are operating via the GIFT City in Gujarat. BSE's platform is again acts like an intermediary, whereas NSE is offering depository receipts on a select few US stocks. So these are roughly the options that domestic investors can tap right now.
So Sanket, can you please explain how this thing works? So you put money in your securities account, or do you put, how will this whole investment mechanism work? How does the money flow in this whole situation, and how convenient is this?
So normally when you invest via international fund, it is quite easy. The KYC formalities required to invest in any typical domestic fund are sufficient enough to put money abroad. But with direct investments under LRS, you have to jump through a few more hoops, right? So firstly, obviously, when you open an account with a US broker or even via a local broker, they will ask you to complete the normal KYC process. Okay. If the account is with a US-based entity, the broker may even ask user to answer a series of questions. It's basically sort of suitability questions, which are as per the US regulations. Now, this onboarding process typically is entirely digital, virtual. It can be completed within, say, a couple of minutes. And the actual account can even be ready and set up within 1 or 2 business days. Now, once the account is actually approved, you have to fund the account via your local bank. Okay. Now, this basically means converting rupees into dollars. This is where the process is a bit tedious. So you have to approach your local bank and obtain a form which is known as the A2 form. It's an application cum declaration form. Once you actually complete the application and wire the funds to the foreign bank, you can then fund your foreign account and start trading. Now, the actual buying and selling activity with the foreign broker is actually quite as easy as with any Indian broker.